You know, you just heard Steve Leishman at the top saying these minutes were, to him, a little confusing. The Fed seems divided. I mean, all the data's all the same for everybody, so it's weird to see a lot of the same people with the same data with very different conclusions.
Yeah, I'll tell you what, I glanced over most of the major headlines and read through as much as I could before I was on air, and I don't see at all the hawkishness that Steve sees. Here's what I saw. I saw likely not appropriate. That was the term used by many regarding a Deese rate cut. Likely not appropriate. I didn't read any hawkishness into most of it, and in terms of inflation, you know, the Fed ignored inflation for about the last year before the market closed. And during that year, inflation was sticky and hardly moved. And I suspect it's the same right now, but yet they're concentrating on it. And many of the news agencies put out headlines that rates spiked, and they didn't. So I'm a bit confused. Let's look at Fed Fund futures. Over 2 weeks, okay, as more it goes down, the more it prices out a cut. Okay, and briefly it was under 30%. But what I draw your attention to is the right side. It broke when they announced no October job meeting, and that the November meeting or the November jobs number would come out after the Deese meeting. That's when it spiked down. But it didn't move anywhere. It actually moved up a little on the minutes. Now, let's look at the 2s and 10s on a 6-hour chart and realize they made their low yield of the session right as stocks open, and stocks are green today. Do you see any wild volatility on the right side? I don't either. It's very strange. Now, if we look at a 10-year, since the last cut in October, basically rates moved up, and now we're moving sideways. And that sideways between 407 and 417 on a 10-year is where we've been closing every day for the month of November. And today is going to be another one, it seems to me.